Yeah, I'm going to keep this fairly informal. So if you have got questions throughout, just please let me know. Raise your hands and queries. Or we've got time at the end as well. So a few of the points I'm going to talk to today, in about I guess adding value to your place, but also this section's about also keeping you on your farm. Points be making time for your business. Getting the right people involved, understanding your cash flow, when things don't go to plan, and I'll also touch a little bit on the next generation, like succession as well, and what we do. This will be centred from a banking point of view. It's going to be pretty generic. We've got a couple of other bankers here too, and in front of a pretty large truck from Ravo. So it is generic, but there might be a slant on the few policies or things I talk about will be that I talk about from NAB. They will be slightly different from other banks. So again, as I talk in this, it's about talking to your advisor in relation to that. From a banking point of view, if you're looking for a new borrowing, be it even a review, your banker generally driving out to the place, your property, your farm, we're assessing all the way, really. You're looking at your neighbours in comparison. We're starting to take mental notes all the way out, and especially when you get to your front gate and we're driving in, you are looking at your cattle, your soil, your grass, your everything, really. The infrastructure, driving past a shed, it's surprising what you can pick up just looking into a shed. And it's these type of little mental notes that the bank is always looking at and assessing as you're going in. A part of that is building, when we put our actual formal submissions together, we're looking at your background and the character piece. All the banks, there's 3 Cs, there's 5 Cs, there's 7 Cs of credit, but really, from my point of view, I look at 3 Cs of credit. From a banking point of view, it'll be capacity, collateral, character in that order. Whereas I know a lot of old school bankers or bankers have been around character. We reverse it around a little bit and be character first. And those sorts of mental notes as you're driving in, you're looking at that person's character, and that'll be. But before that too, you've probably done a little bit of research where you know who you're going to see, if they're a new client or an existing client, their reputation, their reliability, they're trustworthy, and then you're looking at their management coming in. But of course, this works both ways too. You as a grazier, as a farmer, you're judging your banker as well exactly the same way. Otherwise, you wouldn't have got there, and that's so we know that as well. We're trying to. You need to have a good working relationship. Making time for your business. Again, this forms part of the character piece. And it might be, it's important to allocate the time to your business. I mean, you allocate it to your day-to-day operations, but I think also when you're looking at are your financials up to date, are your cash flows completed, and business plan or strategy, what are your future needs, and when, how, and how can we help in that process. It's important to allocate that time and to value it. We'll piece that together in our submissions as well. So we want to hear that from you, and we'll take note of the time that you're putting into that and how prepared it is. Having the right people at your table. That includes bankers, but it's also the accountants and solicitors, agents, consultants, any other education programs. For large businesses, it might be advisory boards, or it could be simply your key personnel in your business, your managers, your family members, people who've got a say in your business. We want to know about that as well, and it's about also, meeting with them, talking with them. If they're at the table too, that's even better with the banker. I regularly try and catch up with my clients after they've caught up with their key personnel. And it's important from a banking point of view that a lot of our information is going to come from your accountant. We have a good relationship with that accountant. Similarly with the solicitor, we need to have those working relationships, and you need to know that you've got those trusted advisors. And on that too, I guess it's important to have the accountants, bankers, solicitors, all knowing your industry. Same with the agents. They're the ones that are buying and selling. The cattle. They're the ones making your money. The consultants. they've all got to be that really industry focused, and also willing to share information with the advisors. The next few points I'm just going to cover off on be around cash flow, and it's understanding your cash flow, budgeting for CapEx, managing expenses, the importance here around that. Cash flows are critical from a banking point of view. If you look at the last few years, for instance, 2019, especially out west, there's a lot of cattle losses. So, if you're going to bring in those financials for that year, it mightn't have been that great compared to the year before or the next year, or your accountant's been able to carry forward their losses, or do some creative accounting behind it. While we look at the assessment, we've got the character piece, we've got the proposal, then we'll go into a financial analysis, and that's about looking at the history, looking at the present, and then the future. And that's where that cash flow comes in. And it's not so much just for the next 12 months, it might be to a point where you're going to go into that year in, year out sustainable business year. So it could be 2 years worth of cash flows, 3, 4 or 5 years. How does that help? It basically helps us know that you're going to understand your business and the timings of your incomes and structures, but we can also look to structure our facilities for you around those timings, and that might be the interest payments, the term of the loan, principal payments, to work in with your cash flow. So cash flows really do play a critical part. And off the back of that too is as managing his expenses. We're coming into a bit more inflationary times, and some of the larger expenses are on the rise. Interest in particular, we have been in a really low interest rate period, but they're on the move. So they're going to start to increase. Diesel, fuel, fertiliser, fodder, everything's sort of on the move at the moment. There's a lot of pressures out there that are outside everybody's control that we need to make sure you've got understanding, but also the bankers understand how we can help, if there should be need around cash flow. And again, it's just talking to the advisors, having quarterly, half-yearly check-ins with your bankers and with your advisors, your accountants, just to see where it's at, see where you are for actual to budget. If you've got your accounting programs, MyOb, QuickBooks, you name it, Xero, they're all out there. Generally, everybody's got them at the moment. Print off your year-to-date profit and loss for that quarter or that half year. And if you've got the cash flow you might have provided for the bank or your own management team, just have a look at where you are, but also then have an understanding of the unders and overs, where you over budget, where you under budget, and how we can help bring that back in line. And the next point there too is we go in and you're looking about collateral. So like Billy mentioned, we're in high valuations and properties are going up through the roof at the moment. So everybody's, they're in a pretty good spot as far as collateral goes. The collateral would be that secondary, the capacity and how you pay your business off your financials and your cash flow. That's your primary debt reduction. That's going to repay your debt. And your collateral piece is that secondary exit. What can you sell to clear the debt should the first primary exit fail? So it's good to understand what sort of capital expenditure you might have for your properties, and that comes back into that cash flow as well. Again, in these times, it could be that the fact that things are a lot more expensive, but also timings on being able to get things done. Parts coming in from everywhere, it mightn't be as regular as you think, so we might have to get you through to that another 6 to 12 month period before you've got everything in place ready to go. Water improvements, dams, pipes, pumps, fences, anything that can improve the efficiency, anything that's going to give your time back, we want to know about that too, and what you're doing and how you've done it. Even if you've banked for 20 years with that banker, just keep them up to date with what you've done to that property. Out of the back of banking commissions in the last few years, we've had banks have to get valuations regardless of what you've done or what you're doing every 3 years generally. So we're talking to valuers pretty often, and we'll have X amount of information for your block, but there's things that we might know that you've done, and that could be like I just said, improving your water or extra dams, which increases your carrying capacities, which in turn is producing more value for your property. We need to know about that so we can then inform those valuers that you might know are getting done because they're just doing at the back end of it. So help in that improves your financial position, your equity position, and in turn strengthens your credit worthiness from a banking point of view. That could help, sharpen our pencil a little bit too when it comes to it. When things go wrong, the last few years things are going perfect. We've, like I said, the perfect storm, low interest rates, high cattle prices, even sugar's been good at the same time. The high property. So the appetite's there from a banking point of view. It's been a little easier in the last few years than it was, say, the previous 7 or thereabouts before that. The guys have been around, the live export times and drought, long extended drought, and it wasn't like that, obviously. So there's keys throughout that, and what's definitely come out of the banking commissions and the pressure that APRA and ASIC are onto the banks in relation to it is about communication. And it works both ways too. From a banking point of view, we need to be communicating to you, but also I think it's key for, if things aren't going right, is communication. That's a simple point there. We just need to know, and we can help get through that point, and we'll be there for you in generally if you're able to communicate. And I think that's key, even when things are good. Communication's key with your banks. Again, this section's about keeping you on your farm, but so that could be the big key point at the moment is succession, and how that's going to happen, especially now with property prices through the roof. Your cattle's worth a lot more. There's smaller blocks that are going for prices that no one expected at the moment. So how can a younger, next generation either come into that industry, or how can they afford to take over your operation that you've had there for 20, 30, 40 years? It's a key point. It's an emotional point. But again, talking to your bankers from a NAB point of view, we've got a NAB Future Farmers. I won't go into too much today, but it's about helping the next generation coming in, where your equity position isn't going to be as strong as, say, the parents out there. So there might be the banks are accepting your lower equity position to come into the market, where all the banks work on benchmarks. So you need to have that post equity position that's quite strong. Your debt service ratios or your interest cover ratios, your LVR's got to be certain points. We're sort of lightening a little bit on the credit point of view to help this next generation come in. So again, if you're out there, talk to your bankers, know where the bank, we're there to help, and to try and help keep that farm in your family, and be there, and look at those intermediary groups as well. Obviously, like I said before, you're going to be talking to your accountant and your solicitors in relation to it. They're key to it, but there's also might be, because there can be some difficult conversations to be had. There are some good third-party groups out there as well that like Next Rule and places like that you can go to that can come in and be the intermediary for you and help discuss that through. There's some really good solicitors, local solicitors here that have got a good experience with it as well, who are agri-focused, who can help with a lot of the setup behind those scenes too. So I know your banker will know exactly who that is, or who to go for, or give you a few names, and then it's up to yourself to make sure you're comfortable again with that personnel. And that's probably having a part of having the right people at your table. If you've got any questions, please hit me or come and see me afterwards. I'll be around. And thanks for your time.